Assalamualaikum everyone. Welcome back to our discussion on Islamic finance and banking. And our focus has been the events in the United States economy. By now we know that the regulators over there have shut down two banks, Silicon Valley Bank and Silvergate Bank. And the main idea here is to see that the concern of the US government over the rundown of bank, and therefore they have announced a $2 trillion bailout to avoid further bank run. So meaning that all of the deposits in banks today are protected by the government, not only the 250K that was covered by FDIC, but now the entire deposits, the big ticket deposits are all guaranteed by the US government. And also further assistance was seen in Europe, where the Central Bank of Switzerland have given a loan, 81 billion euro loan to Credit Suisse to help out on this liquidity. And when we also see that there are quite a lot of unrealized bond losses in US bank, which is equivalent to about 620 billion. So when these bond losses were realized, it will further cause panic to the depositors. And there are many ways to prevent the withdrawal. The traditional way is to impose the statutory reserve requirement, but this will not work now because of the high amount of deposit, concentrated deposit. So if the SRR is put at 5%, then it would be able to manage the small time deposits below 250K. But once we have a big, even big withdrawals, from those million-dollar deposits, so this can be a big problem to bank, to honor the withdrawals. And the issue here is without deposit, bank cannot make loan, right? So bank cannot generate revenues from the loan, and therefore the banking business will be doomed. So it is very critical to make sure that the deposit stays in the banking system. Otherwise, the depositors, due to this issue of trust and confidence, the depositors can simply turn into the capital market and invest in mutual funds. They can buy stocks, and they can buy silver and gold, and they can even purchase landed property and cryptos, and all of this will pose great danger to the banking system when there is a big exodus of deposit fund into the capital market. And we know that bank capital is very little compared to the loan amount, or compared to the total deposit raised. Because the role of bank capital is not to make loan, but to cover up or to cushion loans, from what we call unexpected losses. So you have two types of protection. Number one is from the loan provisioning, impairment provisioning. So when there's not enough provision to cover losses, then bank capital will come in to cover or to absorb what we call these unexpected losses. So bank capital is useless. It is so little relative to the amount of deposit raised. So in a sense that any losses to the bond portfolio or any losses to the loan portfolio, will destroy capital, and this will make the bank to become insolvent. So the issue here is when the banking system is highly leveraged, it means that the bank will be borrowing money from the depositors, and the idea here is that the depositor is lending their money but they can withdraw on call, right? And meaning that if there is a run on the bank, that would mean, withdrawal risk that would destroy the banking system. And this is basically why the U.S. government is announcing this $2 trillion bailout, to provide confidence, to the depositors that any form of mishap happening to the bank, they can rest assured that they should be able to withdraw their money. One of the solution, to avoid a bank run, because once there's a bank run, then the banking system will collapse, right? So if there is a withdrawal which is conducted on a scheduled basis, then it would not be a bank run, because there will be enough liquidity for the bank to pay up the withdrawals. But when there is a bank run, then this is where the leveraging system will work, and there is not enough liquidity to pay up the withdrawals, and bank will get into trouble. So one way to avoid a bank run is simply not to make loan, meaning that whatever deposit the bank is able to mobilize, it will be kept as deposit and used, for cash management. And the bank will not use the deposit to make loans. So this will mean, a 100% reserve banking system. But this will go against the fractional reserve banking. And when the bank is run on the 100% reserve banking, no loan can be generated from the business, and therefore no money can be created from the lending and borrowing activities. So the only way to protect bank is through the government intervention and providing this protection of the deposit at whatever cost, because without a deposit, banks simply cannot do their business. And this is basically what leveraging is all about. That is, for the bank to make money, they have to borrow heavily from the depositors, and making sure that this deposit fund is mobilized into loans and other financial assets like bonds and securities. But unfortunately, Islamic banks have been adopting this highly leveraged banking system, and therefore the Islamic bank will have to face the same problem if they were to confront a withdrawal risk that will, cause a big liquidity crisis on their side. They will have to find a way of how to prevent the future withdrawals, that would cause a bank run. So the Muslim government will have to find a way how to bail out or how to assist the Islamic bank, and that will mean a lot, because meaning that it may not be possible for the Muslim government, because their currency are not like the US dollar. So it is a big thing. It's a very big issue, and many of the Islamic banks may just gone into bankruptcy because the government just don't have the money to bail these banks. Okay, guys, we'll come back and discuss. See you again next in the coming videos. Thank you very much. Assalamualaikum warahmatullahi.